Global equity markets ended Friday in positive territory, and on a weekly basis they were higher than last week. The contributing factors for US equity markets was an increase in consumer confidence, which should help to boost the US economy in time. Other contributing factors was the agreement between the Obama administration and the Republicans for further tax cuts. Several major corporates have also announced their latest earnings results. It was interesting to note that McDonald's didn't quite meet market expectations in terms of their November sales growth targets. This comes despite a recent restaurant index suggesting that most restaurateurs are feeling more confident about their own outlook. This should help with food demand in the world's largest economy in time. The New Zealand dollar has mainly traded just under 75 cents against the US dollar over the past 7 days. It did drop about 0.5 cent against the US at one point last week, immediately following the Reserve Bank of New Zealand's announcement on the official cash rate. However, since that time it has bumped back up and on Monday morning starts the week at 74.80. The Reserve Bank of New Zealand didn't increase the official cash rate last week, but they did change their outlook on the New Zealand economy and on interest rates. For this reason, we've pulled back our forecast for the official cash rate and now don't expect to see an increase until the middle part of 2011. Even from that time, we're likely to see more muted increases through the latter part of that year. Farmers should now expect to see low short-term interest rates for longer, but they will expect to see some increases through the latter part of 2011. The dry conditions in the North Island do seem to be having an effect on the market. Slaughter has increased by around 40% on last week levels. This is a considerable increase and farmers are likely to be offloading stock but also taking advantage of some of the higher scheduled prices on offer recently. This could have an effect on schedules in the short term, even though international prices are looking really good. The US market is also very tight at the moment, and recent figures by the US Department of Agriculture suggest that the US was a net exporter of product through the month of September. This is a rare occasion and is a good indicator of the tight supplies that are occurring in the market at the same time when they are exporting plenty of product. Supplies from other countries are also down. Australia has decreased their exports by 28% in this current year, while New Zealand exports are down around 7.5%. For this reason, we are positive about the outlook for international beef prices. We are also positive about the local schedule prices here in New Zealand and continue to expect increases in schedules over last year levels.